Welcome back to Tesla Daily News Podcast. Today is March 1st, 2026, and we're tracking a mix of demand signals, product updates, and regulatory friction that could matter for Tesla's margins, delivery pace, and the autonomy narrative. Today, we'll cover 7 stories: the sudden shift in Tesla's China delivery times, the new 7-seat Model Y rollout in Europe, fresh questions about Berlin factory utilization, a regulatory reality check on Robotaxi in California, new full self-driving testing in the UAE, a potential Model 3 hardware refresh, and what the used Tesla pricing trend is telling us about brand demand. Story 1. Tesla's China wait times just collapsed, and that's a demand signal investors can't ignore. Here's the hook. In China, Tesla delivery estimates are now down to roughly 1 to 3 weeks across models. Context: in EVs, wait times are a real-time proxy for demand versus supply. When wait times shrink quickly, it usually means the backlog has been cleared, incentives are working harder, or production is outrunning orders. Details: Electrek reports Tesla's China delivery times fell from several weeks, and in some cases up to around 2 months late last year, down to about 1 to 3 weeks now. The same report notes Tesla is extending financing again. Impact: for the stock, the immediate question is pricing power. Short wait times can be good if Tesla is simply operating more efficiently and delivering faster. But paired with extended financing, it can also suggest Tesla is stimulating demand to keep volume steady. That tends to pressure automotive gross margin, especially in a market where local competitors are aggressive and price-sensitive. Takeaway: watch China incentives and reported weekly registration data closely. If China demand needs heavier financing support to move units, that's a potential margin headwind for the quarter, even if deliveries hold up. Story 2. Tesla launches the 7-seat Model Y in Europe, a revenue per unit lever, but not necessarily the product Europeans are asking for. Hook: Tesla is now selling a 7-seat Model Y option in Europe for an added €2,500. Context: Tesla's big strategic goal in Europe right now is defending share while keeping the refreshed Juniper Model Y line moving. Small configuration changes can lift average selling price without a full redesign, which can help margins if the take rate is meaningful. Details: Electrek says the third-row option costs €2,500 and is available on the long-range, all-wheel drive configuration, with deliveries expected to begin in April. Local coverage in Italy, Greece, Spain, and France echoes that rollout, and one report cites an Italian price point around €55,490 for the premium long-range 7-seat configuration. Impact: the bull case is simple. If families pay up for the third row, Tesla lifts ASP with relatively limited additional manufacturing complexity. The bear case is that the third row in the Model Y is historically tight, and Electrek argues many buyers actually want a longer wheelbase, Model Y-style product instead. If the option doesn't sell well, it won't materially change Europe demand, and might even highlight product fit limitations. Takeaway: investors should watch 2 things: European order configurator lead times after the April start, and whether Tesla can use this option to reduce discounting. If the 7-seat add-on replaces price cuts, that's margin positive. Story 3. A report claims Berlin utilization fell under 40%, and that's potentially a major fixed cost story. Hook: German reporting is raising alarms that Tesla's Grünheide plant could be running at under 40% utilization. Context: factory utilization matters because EV manufacturing has a lot of fixed cost. When a plant runs far below capacity, each vehicle absorbs more overhead, and that can compress margins even if per-unit variable costs are stable. Details: NTV reports that despite management commentary suggesting production is ramping, the site's utilization may have dropped below 40%. Impact: if that utilization figure is accurate and persistent, it's a red flag for near-term profitability in Europe. It would also amplify investor concerns about soft demand in the region and raise questions about how aggressively Tesla may need to use pricing, financing, or new trims, like the 7-seat Model Y, to keep lines running. Takeaway: watch for any confirming data, European registration trends, Tesla's delivery guidance commentary, and any observable changes in staffing or shifts. Low utilization can reverse quickly if demand improves, but if it lingers, it becomes a structural margin problem. Story 4. Robotaxi reality check. Tesla reportedly hasn't pursued key California permits or logged autonomous test miles in 2025. Hook: Tesla's Robotaxi timeline is facing a regulatory credibility test in California. Context: autonomy is one of the biggest valuation debates in Tesla. The market can price in future Robotaxi cash flows, but regulators and formal testing frameworks can slow deployment, especially in a state as visible as California. Details. IndianWitness.com reports Tesla has not applied for required California permits tied to driverless Robotaxi service, and that it did not log autonomous test miles in 2025, according to records cited in that piece. Impact. For investors, the point isn't whether Tesla can launch a supervised ride-hail pilot somewhere else. The point is that a large, high-value market like California has clear regulatory gates. If Tesla hasn't moved through those gates, it raises the probability of timeline slips, which can hit sentiment if the stock has autonomy optimism priced in. Takeaway. Treat Robotaxi timelines as jurisdiction by jurisdiction. Progress in one region doesn't automatically translate to California approval. If Tesla wants the market to believe in near-term Robotaxi revenue, permitting steps matter. Story 5. Tesla full self-driving is being tested in the UAE, a potential path to earlier scale deployments outside the toughest U.S. jurisdictions. Hook. Tesla has begun testing full self-driving in the United Arab Emirates for the first time. Context. If California is slow, Tesla can still build momentum by proving operational safety and partnerships elsewhere. International pilots can generate data, credibility, and potentially earlier commercial use cases. Details. Redmond Pi reports the Integrated Transport Center, also known as Abu Dhabi Mobility, announced that Tesla's FSD is being tested in the UAE. Impact. This could be sentiment positive because it shows regulators in at least one major market are willing to collaborate on testing. It doesn't instantly create Robotaxi revenue, but it can help Tesla build a narrative of global autonomy progress. For valuation, investors will ask, does this lead to paid deployments, or is it simply a test program with limited scope? Takeaway. Watch for specifics. Whether the testing is supervised or unsupervised, geofenced or broad, and whether it evolves into a commercial service with defined economics. Story 6. Model 3 code hints at a display upgrade, and used Model S and X prices are rising. Hook. A potential Model 3 update may be coming, and the used market is sending mixed but interesting signals. Context. Tesla's product cadence affects demand elasticity. Small hardware upgrades can improve competitiveness against newer rivals without a full platform change. Details. TechRadar reports code suggesting 2 upgrades for the Model 3, including a 16-inch QHD display, bringing it more in line with the Model Y. The same article notes used Model S and Model X prices are on the rise. Impact. For investors, a Model 3 refresh can help sustain demand in a critical segment, especially if competitors are pushing more premium interiors and larger displays. Meanwhile, rising used S and X prices can hint at constrained supply or renewed demand for the higher-end lineup, which could help Tesla's brand halo even if S and X volumes are not the main growth driver. Takeaway. Pay attention to whether upgrades come with a price change. If Tesla can add perceived value without major cost inflation, that can support margins and reduce the need for discounts. Story 7. Used Teslas are getting more expensive, even as used EVs broadly get cheaper. Hook. One dataset suggests used Tesla prices rose about 4.3%, while many other used EVs fell. Context. Residual values matter. Strong used pricing supports leasing economics, improves total cost of ownership perception, and can reinforce demand for new vehicles. Details. ITC.ua, citing IC Cars, reports the average used Tesla price increased about 4.3%. It also cites model-specific moves, used Model S up about 8.5% to roughly $51,249, and used Model X up about 10.3% to roughly $57,306. The article notes smaller increases for Model 3 and Model Y. Impact. If accurate, this is a constructive signal for Tesla's brand and for confidence in long-term ownership costs. But investors should be careful. Used price rises can also reflect limited supply, shifting mix, or regional effects, not necessarily a broad surge in demand. Takeaway. If used pricing stays firm while new vehicle incentives rise, that's an interesting split. It could indicate Tesla is protecting long-term value even while stimulating short-term sales. Let's wrap it up. Today's big themes are demand and credibility. In China, faster delivery and renewed financing point to tougher competition and possible margin pressure. In Europe, Tesla is trying to lift revenue per unit with a 7-seat Model Y option as it fights for volume, while reports about Berlin utilization raise the stakes on keeping that factory loaded. And on autonomy, California looks like a slower regulatory path, but the UAE testing shows Tesla is still pushing to expand FSD validation in new markets. For tomorrow, watch for any follow-up signals on China pricing and incentives, any corroboration on Berlin production levels, and any new details on what testing in the UAE actually means: supervised, geofenced, or something closer to a commercial rollout. If you found this helpful, subscribe to Tesla Daily News Podcast and follow us for a clear, investor-focused rundown every day.